Hi buddy, last few weeks the stock market has been dropping. Nasdaq dropped 8%, Apple dropped 11%, Tesla dropped 30% and Amazon dropped 10%. You must be thinking, did I bought any stocks last few weeks during the dip? And will the stock market dip even further? And if the stock market really crashes, what should we do right now? Over the years, I have been coaching people around Asia how to profit safely and consistently in the stock market. And one of the most frequently asked questions is what to do if the stock market crashes tomorrow. In this video, I want to share with you the 4 actionable steps for us to profit from the stock market when it crashes. First of all, you have to understand that nobody in the world are able to predict the exact time of stock market crashes consistently again and again. However, the good news is that although we are unable to predict stock market crashes, we are able to prepare ourselves for market crash so as to profit from it. So how do we prepare for it? Step 1. When the market crashes, stay calm and do not panic, because most people will panic and act rashly when they realize that their portfolio drops more than 20% in a short time. This is when emotions take over our logical mind, and most of the time people tend to make stupid decisions after that. It is similar to our daily lives. When conflict or misunderstanding happens between couples or even close buddies, one party or both parties tend to overreact immediately to it. When someone screams at you, most people react immediately and scream back to retaliate. And most of the time, our actions during that moment were irrational and we tend to regret after the whole situation. So instead of reacting immediately, sometimes it will be good if we keep silent for the first 30 minutes and only react after 30 minutes. And you will notice the words and the tone we use are much more pleasant comparing with us reacting immediately on the spot during the conflict. So same applies for investing. When stock market price drops, stay calm and review your whole portfolio. Do not react or make any decision immediately. Step number 2, question yourself. Usually when stock market drops, regardless the drop is 10% or even 50%, our overall portfolio value typically drops as well during this period. While staying calm, always question yourself, what is the initial reasons of you buying each stocks? Maybe you bought stock A because it's high dividend yield of 5% and you bought stocks B for its potential growth for the next 5 years, as they have proven track record of having consistent revenue growth, healthy cash flow and many more. So do question yourself whether the initial reason still exists. Is stock A still providing at least 5% dividend yield for you right now? And if yes, you should not sell the stock because the initial reason that you bought stock A still exists and fundamentally nothing changed. Moreover, the falling of stock in stock A can be a great opportunity for you to buy even more shares right now, because most probably the yield will be much higher now as the stock price drops. For example, if the revenue and cash flow of stock B is dropping, my initial reason of buying stock B does not exist anymore. Therefore, I may consider selling stock B regardless of the current stock price. Because it is proven that if the underlying business is not doing well, the stock price will eventually follow. Do remember that stock market is always irrational in the short run and logical in the long run. If you own solid and growing businesses, the stock price will grow in the long run, because when you buy a stock, you are actually owning a part of the underlying business. If you want to know how to profit from the stock market through picking the right stocks, I've shared the details in the video. I'll put the link up here and in the description below. So step 3, buy the dip. Of course, buy the dip after doing your own research. When stock market drops, most of the stocks in your portfolio may drop in stock price as well. So during this period of time, you can consider to add on more quantity of the same stocks you have in your portfolio. Of course, if the price is still undervalued. So during last few weeks dip, I did add on shares on both Alibaba stock and my Square stock, as the price is reasonable compared to my calculated entry price. Even Warren Buffett himself mentioned that we should buy during the dip.
The market's down almost 800 points this morning.
Yeah.
Concern for you?
Well, no, that's good for us, actually. We're a net buyer of stocks over time. And just like being a net buyer of food, I expect to buy food the rest of my life, and I hope that food goes down in price tomorrow. So when stocks are down, we're going to be buying on balance. And who wouldn't rather buy it, a lower price at a higher price? People are really strange on that. I mean, because most of your listeners are savers, and that means they'll be net buyers, and they should want the stock market to go down. They should want to buy at a lower price. But they have that feeling that they just feel better when stocks are going up.
But the strange thing is that during the dip, majority of the people are not willing to buy. Based on my experience, most of the people are not buying the dip is because they do not have the conviction on the stocks in their portfolio. They are buying purely for speculation or due to some hype. So when the market drops, they are usually panicked and do not know what to do next, as they do not have any game plan or any strategy to start with in the beginning. I've seen a lot of these cases, so always remember to educate yourself regarding stock investing before even invest in the stock market. Step number 4, buy stocks in batches. Right now you are ready to buy the dip, but do not just throw a lump sum of money into the stock market. I believe you definitely have some experiences whereby after you bought a stock, the stock price dipped even further. This is perfectly normal because we will never know when is the bottom. Therefore, you should always buy in batches whenever there's a dip. For example, I'm prepared to use 80,000 to invest into stock A. Instead of investing all 80,000 at once, I will divide into 4 different batches. Therefore, I will invest 20,000 each time in 4 batches for the next 1 month. You can name this as dollar cost averaging as well. So step 5, only invest with money you have. I understand that currently the interest rate for margin and even bank loan is much lower compared to the past. Therefore, you may be tempted to use borrowed money to increase your profit into the stock market. Do always remember that stock market is always volatile in the short run. When we invest in good stocks, the stock price may rise 30% and may drop 30% as well in the short run. And if we use margin, we may receive margin call and being forced to sell the stocks at a much lower price when it may be the best time to buy even more shares. Moreover, when we are using margin, we are paying interest on a daily basis. Therefore, people may have the mindset of making quick buck, quick money in the short term to cover their interest. And this may lead to them making even more emotional and silly decisions along the way. So in short, only invest with the money you have, and I assure you that you will go a long way. In summary, these are the 5 actionable steps for you when stock market crashes. Number 1, stay calm and do not panic. Number 2, always question yourself when the stock market crash and do not act immediately. And number 3, buy the dip, of course after your research. And number 4, buy stocks in batches. And number 5, only invest with money you have and do not use any margin or any borrowed money. After applying these steps, I believe that you too are able to achieve consistent profits in the long run from the stock market. Anyway, do comment down below to share with us between step 1 to step 5, which step is most important for you, and we can discuss further in the comment section below. Do subscribe to this channel so that you are able to learn more about stock investing and we can profit from the stock market together. Do watch this video over here to find out how you can pick profitable stocks. I will see you there.